Good evening, everybody. Hope everybody's having a nice spring evening. On Cinco de Mayo. I was telling the chat room today that yesterday was Star Wars Day with May the Force be with you, May 4th. Oh, yeah. Tonight, I put a nice coat of wax on the 1968 Ford pickup truck, and it looks brand new. So, with that, I guess we're all set to go. Anyways, as we saw today, or as we saw on Friday, let me make this chart a little bit smaller. This way. You can see we've got kind of a top up here. On Friday or Thursday, we showed indecision right at that same level. Friday, we sold off, but the T-line was still a factor. So the implication was that there might be some profit taking up here, which there was. I mean, they sold it off pretty hefty at one point today. But notice what happened. They closed it back up above the T-line. So if you come back to the very basic of analysis, which is you need to see a candlestick sell signal and a close below the T-line. Otherwise, you're still in an uptrend. Okay, Pat, that's the place to be tonight. And let's see, the NASDAQ, the reason it wasn't really that convincing or that worrisome was, as we could see today, early in the day, they opened the NASDAQ lower, took it down a little bit, but then after not too many minutes, or 20 minutes or so, they were trading back up above where they opened it, which should give you one very simple analysis, which is they're buying since they opened. So that just kind of puts a little bit of quick evidence in the fact that there are buyers still in the market today, which means they're not selling it off. So that kind of left everything else, and the transportation index left everything else without a great fear that they wouldn't be bringing this back up. Now, also, let me go back to when I'm wondering whether they're taking this market down or taking it up, I'll just flip to my 10-minute chart. And they slammed it down the first 20 minutes, and then ever since that time, they brought it right back up again. So it kind of takes the anxiety out of, is this today they're crashing it for some reason? And this is not unusual in an uptrend. Oops, that was a 5-minute chart. 10-minute chart, kind of the same scenario. It's not unusual to see them take it down during an uptrend and then take it back up. Take it down, take it back up, which is good for this type of market, or for any market, because that essentially tells you there's no exuberance being built into the market. That they're taking their profits on the way up, and if they're taking their profits on the way up and it's still heading higher, that means that's a good solid uptrend. I'm still of the opinion, which you should not ever take anybody's opinion because you can do your own analysis of the charts. As long as we're in this uptrend, we've still got this potential of breaking out into new territory. If they broke this upward trend channel, make it small enough. And as you can see, they're kind of still pushing this up toward this level. If they break out through there, I think we're going to have another few months of a nice strong run going into the summertime. Okay, with that, let's see what we got here. Crude oil prices have been just kind of waffling, but you can see they're in an steady uptrending channel. But obviously, crude oil prices aren't doing anything that is affecting the market. Interest rates. Interest rates, here are the bond prices. Look at this slow curve. We're at this breakout level. If bond prices break out again, that means interest rates are still going lower. I don't know. Jim, can you help Miss Peggy? Miss Peggy, I will, I got your email. I will get back with you probably tomorrow. Yeah, you might want to reboot. Let's see, gold. Let's see what gold is doing. Gold is trying to bottom out. Was kind of a morning star type signal. Once again, the 50 will have to be breached to get in a strong uptrend, and the silver is still caught in this downtrending channel. Let's make this bigger so we can see it. Sold off today after it opened. Still might be having a hard time getting up through this level. Let's see, gold, silver, dollar. Dollar still rolling over. So this is where you kind of observe the obvious. This is, again, putting as many pieces of information as you can into your analysis. Right now, we can tell we're in a downtrend. So anytime we start seeing it roll over like this, that means we're probably still in the downtrend, which makes this the top of the downtrend, makes this the bottom of the downtrend. Dollar can potentially come back down to this level, which means the euro in the slow curve uptrend, and the Japanese yen, which has no correlation right now with anything, is still just moving sideways. I wouldn't be trading the yen. The British pound, a little steady uptrend, but nothing of any great magnitude. That's doesn't even look like a trader at this point. Let's see, corn. Corn is still in a very slow uptrend, but very slow. And I wouldn't be trading corn right now. Just not enough trend movement. Wheat has a better chart. There's your J-hook pattern. This one I'd be buying. Notice what they did today at this level. They gapped up. This was today. This is after hours. They gapped it up through that resistance, telling us the J-hook pattern is still in progress. Soybeans is still on its way down, probably coming back to the 50-day moving average. Been long live cattle. Been holding this as long as it stays above the T line. And lean hogs has been pretty difficult to trade recently, kind of just moving sideways. But notice where it's moved sideways too, right there at the 50-day moving average. And let me think what else we got. Gold, silver, dollar. Guess that's about it. Cotton, still in a slow, steady uptrend. Cocoa, hard to trade at this point, sideways. And sugar, same scenario, sideways. And coffee. Coffee, not tradable right now. I mean, it doesn't really have any major direction. Except it did do this long-legged doji right here in the T line. That should give you a good indication tomorrow of which way they're going to go and how they open it. Okay, let's check at some of the stocks that we've recently been recommend. Let's say that again. Let's check some of the stocks that we've recently been recommending. From Scotch does that to you. Still like this IT chart, ITMN. Morningstar signal, doji sandwich, J-hook pattern, and kind of a bigger scoop type pattern. You just want to stay long until you see a sell signal on this one. BDSI, Morningstar signal, doji sandwich, gap up, J-hook pattern. You just stay long until you see a sell signal. More than likely, they're going to retest this high. I'm going to move away from there so I don't hit that darn thing. We recommended ANIK because it did kind of a slow curve J-hook pattern that broke out through this downtrending channel, and it bounced right off the 50. There's your doji sandwich right at the breakout area. This one should move higher. More than likely, up here to the 5250 area, based upon the top of this trend channel. Yeah, hold on to your individual ones. We'll get to them before the end of the night. And Maxwell. Maxwell we recommended because it had a good-looking chart. Slow curve, gapped up. Back and filled today, but notice where it didn't close. It didn't close even below the 3T line. This one you stay long until you see a sell signal, which is a close below the T line. And AFOP, continue to hold this one as long as it stays above the T line. And now Tesla, let's take a look at Tesla, just for the analytical information that we can see in this chart. It had a nice strong move, has pulled back. There's your double bottom, and we're trading back up above the T line. Stochastics still have more room to the upside, probably enough room to take you through the 50, which would take you through this level. And if they came up through the 50, I mean, now we're at a lower low, no, higher low from here, still kind of your double bottom. And if they come up here, then you've hit a new higher high, which means Tesla should be back in its uptrend. Oh, they have earnings later this week? All right. Thank you. PBR we recommended today. There's that big J-hook pattern. It could have been, if it was bought today, you hold on to it. Still using the 3T. Let's make this bigger. There we go. Using the 3T as support. If this opens positive tomorrow with a doji sandwich after kind of your best friend or the gap up, you want to be a buyer. Remember, that best friend usually starts some very powerful up moves, like we see in this chart. CVRR, a doji, right on the T line and the 200, gap up. I just told you there's been new energy put in into that price move. So that's why you want to use your best friend as one of your primary indicators or scans. This is BWP, big fry pan bottom, cup and handle. We're right at this breakout area. If they come back up through this level, you want to be buying because there's nothing up here to create any resistance. So you get up here to the 200-day moving average. So that still provides a very significant move. If it could move 8 points on a $16 stock price, that's a 50% move, I'm pretty sure. And the probabilities still indicate that could happen. Again, what usually happens out of a fry pan bottom? Usually a very strong price move. Sometimes it takes a stutter step to get going, but you're usually going to get a very strong price move. AMKR, this one you just stay long. There's that trend kicker signal. You just stay long. Now we have had, now on TCNet, this looks more like a tweezer top. I mean, and closed here is a doji. At this point, you put your sell stop one tick below today's low. If it comes back down through there, more than likely they're going to bring it back down to the T line. That's when you want to probably take some profits. SDR, another kind of fry pan bottom. Let's make this a little bit bigger. Little J-hook type pattern. This one you definitely want to be buying on positive trading, even tomorrow. This one still has a good, probably a 1.5 to the upside, or another 25, 27% to the upside. Let me see, where am I? SDR. Yeah. Oh, we recommended AR or AER today. There's that fry pan bottom. We're right at the breakout level. Did a doji, which makes this very simple. If they open this positive, which means if we see the pre-market futures trading positive and this one opening positive, they're going to break out. You want to be buying immediately. And then you just use today's close as your stop, because if they open this positive, our simple rule of the doji is they should be moving positive. It shouldn't close back below the today's open and close. BWEN, another one recommended today. Anytime you see that big price move, that tells you there's probably been a severe change of investor sentiment. This one you definitely want to be buying on positive trading tomorrow, breaking out through this territory. There were questions today about a doji and the oversold that you should sell. Oh, you mean the doji and the overbought? That's why you want to know the difference between your signal and your price pattern. This is still a fry pan bottom price pattern. When do most of these fry pan bottoms, cradle patterns, J-hook patterns work most effectively? Usually, when they're up in the overbought condition. So this is usually a place where you're going to see a breakout occur. So remember, there's 5 or 6 patterns. You want to learn them well. You've got the fry pan bottom, cradle pattern, scoop pattern, J-hook pattern, belt hold, and usually the fry pan bottom, the J-hook, the scoop pattern are all going to break out when you're in the overbought condition. So that's why you want to be able to visually recognize what's happening to investor sentiment. It's building up. Bah. CPE is one that we've been holding on to. It's got that cup and handle setup. This one you can definitely be buying on positive trading tomorrow. And use the T-line as your stop. SEM. SEM got a little bit iffy. Whoops. That's not the SEM we're looking for. It needed to close above the T-line to stay in it after that bearish belt hold. Now it needs to definitely open positive. If it opens weaker tomorrow, that tells you the bears are winning, the bulls lost. You want to close out the position. Okay, what else do we have here? Somebody scribbled some symbols on here that I can't even read. Oh, GGAL, that's it. GGAL, also be ready to buy. If this closes back below the T-line, you probably want to close it out. That tells you you're still in the congestion area. If they open this positive and start breaking out, you want to buy because that means you're in the next wave, wave 3. Let's see. I think we recommended... Yeah, TQNT, all you do is hold this one. You've got your best friend right here. You've got your fry pan bottom breakout. You just want to continue to hold TQNT. All right. You might want to take a look at Kendai tomorrow. Because of the cradle pattern in here, you got a left-right combo cradle pattern, close above the T line. If this opens positive, your next target's probably going to be up here at the up here at the 50-day moving average. And another one, HTHT, also has that little cradle pattern, scoop type pattern. This one can be bought on positive trading tomorrow. Again, this is where when it gets back up to this level or even the 50, your stochastics are going to be pretty high, but you're looking at the scoop pattern. That usually has that slingshot effect coming out the other side. ERII, nice fry pan bottom. This one you can be buying on positive trading tomorrow. UVE also has a good looking chart. No, it's a terrible chart. This UVE. Notice the double doji setup. Bounce right off the T line again. You're right at the breakout. Big slow curve, fry pan bottom. And observe the obvious. Every time it hit the 50, we had a bullish harami. A hammer, dojis, bullish harami. Doji sandwich, double doji sandwich. Get ready to buy this on positive trading. GSAT. Oh, no. Something's wrong there. Oh, I don't know what it is, but FF. There's your kind of your J-hook pattern. There's your big rounding bottom, and then there's your breakout area. What do we expect after a doji sandwich? More upside. Okay? Making fun of me. Oh, let's see. The sixth pattern is the fry pan bottom, the cradle pattern. We looked at the cradle pattern where? At Kendai. Whoops. Cradle pattern. There's the big headboard, the bed, which is very flat trading, and then the footboard is a big candle again. Even without this big headboard, anytime you see a series of dojis, and they tell you which way they're going, it's usually going to be significant after that. If price is above the T line and there is no sell signal, but price is closed below the T line, then opens the next day and trades lower, should you sell it in the event though there has no sell signal? Usually, yes, Marty. Thank you, Ed. Usually, yes, with the idea that if it turns right around because it's not a convincing sell because there's no sell signal, get ready to buy it back if it comes back up through the T line. Elliot, Ed, put them up there. The only one I don't see is the belt hold, which we'll get to also. RLD. There's your left-right combo. There's your break through this lower or the downtrending channel. There's your J-hook pattern breaking out through here. This one you continue to own, or you can be buying. Omar, big fry pan bottom, and notice that when it came up through the 50, it's still trading positive using the 50 and the T line as support. Fry pan bottom usually tells us there's going to be more upside. Even though you're up here toward the overbought area, there's going to be more upside. This is just kind of a buildup of investor sentiment. GWPH. Some of these biotechs, the reason I'm showing this one is there's your best friend. And the bigger the signal, the more compelling you're going to be in an uptrend. So anytime I see these big price moves, I kind of expect what I call the 45 degree, that there'll be a steady uptrend afterwards. You just use the T line as your stop. It shouldn't come back through that level. RNA, J-hook pattern with a little doji gap up. If this is wave 1, wave 3 approximately this wave, which means the target now becomes the 200-day moving average. SBGI, another little scoop type pattern. This one you can be buying with the idea that if it can break the 30, you've got a very strong upside potential from that point. I'd say the belt hold is one that you always want to kind of keep an eye on, because most people don't pay attention to it, but it has one very simple analysis, is that they just wiped out a huge amount of sellers, and once the sellers were gone, you got buyers and sellers with sellers in control. Now all of a sudden your sellers are gone. They took them all out, and then you can see the bulls took over. Now, without any sellers in the way, you get a very strong price move. And that's what happened over here with Leaf. Belt hold, sellers out of the way, starting your uptrend. There's your little J-hook pattern. So that means you want to keep an eye on YRCW. Belt hold. This one you want to be buying on positive trading right here on the T line, because you got your slow curve. Now your cup and handle with a belt hold that told you the sellers have been wiped out or sopped up. You can get ready to buy this one. And DDG, another one that's done a very nice belt hold, left-right combo. This one you can be buying on positive trading, which tells us the 50 is not acting as resistance, which also tells us this downtrending channel isn't acting as resistance. If it gets through the 200, you got a lot of running room. When the stock closed halfway on the T line, or a Wix is on the T line, what is the if the stock closed halfway on the T line, or the wick is on the T line, what is considered? Lou, give me an example. Let's see. Oh, VIPS, expensive stock, but you can see this fry pan bottom setting up, and notice where it's setting up off the 50-day moving average. LPI, a J-hook pattern. You definitely want to buy this on positive trading, breaking out into new territory. Oh, okay, VIPS. VIPS. Lou, I still don't get it. 2 days ago. Oh, you had to close above the T line, which made it very simple. If it opened positive the next day, confirming the signal, you want to be a buyer. Oh, I see what you're saying. If it closes above and you're halfway, you're closing. This is the important part, where it closes, not what the candle is. Well, the candle's important because you want to see that this was a bullish candle without any indecisiveness. So you have dojis right on the support level, and then you had a decisive candle that closed above the T line as well as the 50. You want to be a buyer of this one. You can still be a buyer of this one If it opens positive tomorrow, breaking out to this level, because you know your next target is the recent highs. NGLS, there's your kind of your flutter kicker, setting you up. This one you want to be buying if it breaks out through that darn thing is enough to make you kick your grandmother. If it goes through this level right here. And now CCIH, this is a good looking chart. You got your morning star signal and a close above the T line. If it opens positive tomorrow, you want to be a buyer. Why is that compelling? Because you got a bunch of things that are in place. You're going to break this downtrending channel. The T line's not acting as resistance, and your upside target is moving from around the $15 level to the $20 level, or 5 points on a $15 stock, basically a 35% return. So when you do your analysis, a lot of people say, well, shoot, if there's 60 stocks out there that look good today, how do you pick the best ones? Uh-oh, what is that? Man, oh, man. Ooh. You pick the ones with the best upside potential. For example, DMND. Whoops, what did I just do? DMND. That's a good-looking chart. This could come all the way back up to the top here. If it did, you've got 4 points on a $31 stock. That's still decent, but if you're making your comparisons of which one do you want to buy, do I want to buy a stock that has an upside potential right now of the first major resistance level being 4 points or 5 points? That's still a 15% return. Or do I want to find something where I know my first resistance level has a 35% return? Where do you set your stop? If you're buying this one on positive trading tomorrow, you don't want to see it close back below the T line. Again, this comes back into the realm of cut your losses short and let your profits run. If we're seeing a buy signal, stochastics coming out of the oversold area, bullish confirmation of the buy signal, the Morningstar signal, and a close above the T line, if it opens positive, the probabilities tell us we should be moving positive. If it opens positive and then closes back below the T line, that tells us they didn't confirm the confirmation and they're back below the T line, which then tells us we're still in this downtrending channel, get back out of the trade. What we're looking for is the probabilities that if this opens positive tomorrow, they should be taking it positive. That's when you want to be buying. Or this is the reason why you want to be buying. It's because it's setting up with all the parameters in the right place as a buy. INGR, there's kind of that, this is an example of a belt hold bullish engulfing signal, and comes back to that same concept. The bigger the signal, the more compelling that there's been a change of investor sentiment, that you're still in an uptrend. As we can see down here, you have that big gap up, a doji gap up, your best friend. Even though it sold off the next day, it didn't close below the T line. And what do we expect after a big price move? At least a 45-degree to come off of there. I know there's, let's see, HZNP had a good-looking chart. This one you just stay long as you stay above the T line. We're looking for it to break out through this level, which would give you some more running room. Now, Apple, one of those that had that big price move sideways, and then a left-right combo telling us they're still taking this one higher. This gap up right here, and then bullish confirmation the next day after the doji, told us we still have more upside. Then it consolidated, kind of letting the T-line catch up a little bit. They're still in an uptrend. So when you're looking at something like that, I think we have another one. Bah. That wasn't it. Oh, man, I had a perfect example. Well, shazbats. I had an example of one, and I don't know where it went. Somebody stole my example. All right. Zoo, I'm looking at this one for an option trade tomorrow, so folks in the option room, I will probably have this written up. Notice a little mini scoop. Notice your hammer gap up, making at least a short-term trade right up here to the 50-day moving average. So I can look at those. There it is. Thank you. How come I didn't write that down? That was it. Same scenario. The big price move, the sideways move, and then popping it back up. That tells you there's going to still be more upside. Okay, Zoo has earnings tomorrow. All right, thank you. All right, couple shorts. This one we shorted a couple of days ago. No, more than a couple of days ago, but covered it when it came back up through this candle right here on the short-term trading, faster trading accounts. Kept it in some of the longer option trading accounts because notice what it didn't do that day or the next day or today. It didn't close above the T-line. So this one, even on the trading accounts, we'll be shorting it again, especially if it comes back down to today's low. I'm making this screen so small that even I have to squint. So anyways, this one still hasn't been able to get up above the T-line, and shall do this. Again, this is where you observe the obvious. The obvious is you're in a downtrend. It's trying to support, but if it starts breaking down, tells us we're still in a downtrend, looking for it to come to the bottom of the trend channel. Let's see. Apple, I don't know. All you can do with Apple right now is stay long, as long as it stays above the T-line. Jerry, I was told not to buy a call when under the 50-day moving average. We're not buying the 50-day moving average. We're buying the signals. We'll come across more. Yeah, I wouldn't go on that basis. Go on the basis of whether you're seeing buy signals in the oversold condition. The 50-day moving average is just a indicator, not a instigator of buys and sells. And MTW shorted this one today based upon the kicker signal down through the T-line and the 50. More than likely, there's your first target, which means they could get you pretty close to the 200-day moving average. Okay, let me see if I did this. YRCW. Oh, this one, the belt hold, J-hook. Okay, right now, with the markets in a slow uptrend, we definitely need to see this open positive tomorrow. If we see the pre-market futures showing weakness, that tells us we're failing up here. Not that this pretty much tells us that probably for the next week or two, they're going to be consolidating it before they can take it up through. Now, if they open up positive, that tells us we're still above the T-line. We're getting pretty close to breaking out through this level. When they do, expect some big upside movement. If I could go back here, that would be too hard to do. I can't remember where it was. The T-line is the black line. The little light green line is the 3 T-line, which Oh, I promised you we were going to do a session on the T line, using the 3T line and the T line. We'll try to do that within the next week. Okay, that's it. When there is a big price move, gap up, how do we decide are we to buy and where? Oh, somebody give me the one that was moved up big. It was a smaller price stock today. Was it HMY? No. Let's see. That was it. So if it's trading right here, is it time to buy? If it's trading right here, is it time to buy? If it's trading right here, is this sucking you in? Well, this is where you can easily go to your 10-minute chart. Say, all right, maybe I don't want to be buying right now. Nothing tells me I should be buying. Maybe right here didn't confirm. Now I'm back on the T line, and I'm seeing buy signals. Now I can be buying because it hasn't closed below the T line. Up here, let's see, let's do it this way. If I saw the 10-minute chart that looks like this, I've already missed a big move. Don't want to be buying it. Moving back, still don't want to be buying it. Now I might be buying some because it's bouncing off the T line. I can stay long, and at this point, I would stay long as I don't see a sell signal in the 10-minute chart and a close back below the T line. So anyways, that's what I use for when something's moving real big, of whether they're still buying or whether they're starting to take profits. Okay. Any other general questions on candlesticks? All right. If not, Jim, go ahead and do the double line. Okay, Jim, do the next double line. Okay, Joy. Like MTW, no. Different charts. You can be short this one. The only thing is you're starting to get toward the oversold area and you're getting close to the 50. So I'd watch that. That would be your downside. Whereas MTW had a kicker signal. Stochastic still heading down, or now heading down strong, and there's no support until you get down here to the 200-day moving average. Goldman, short. You can, if it opens lower tomorrow, your very doji sandwich with the gap down. You just have to be aware of the lack of percent move, so it has to move down pretty big to make a decent amount of money, like 15 points from here down to that'd be around 142 to make 10%, and or trade the puts. Weight Watchers, this one is your gap up kicker signal. Whoops, did that too fast. You stay long. At this point, I'd probably use this level as my stop, but it shouldn't come back down through there. Oh, I don't think we get Fannie Mae over here, or do we? S dot FNMA. No, this service and TCNet doesn't get Fannie Mae and Freddie Mac anymore for whatever reason. I don't know. AXAS. Just stay long on this one. As you can see, there's nothing here that's telling us that there's any sellers, and you can see kind of the T-line crunch. Even though you don't have anything up there, you can see the resistance level, and they keep pushing everything back up through that resistance level. So you stay long on this one as long as it doesn't close below the T-line. Rundy, get ready to buy this one. This is one that we've looked at a few times in the last few days. I would rather put a buy stop here at 7, knowing that if it came up through 7, this fry pan bottom is starting to break out. Ford, you stay long with this one as a longer-term hold, as long as right now it stays above the 50-day moving average. The Russell 2000, same scenario as the NASDAQ, seems to be supporting on the 200. If it breaks this downtrending channel, you definitely want to be buying. It means that means the uptrend is definitely in progress. Disney also get ready to buy this. About ready to break out through this channel. Notice kind of your flutter kicker, but this is actually a bullish harami, and then it closed above the T line. Telling you the selling had stopped. They're taking it back up. I would stay long Disney as long as it doesn't close back below the T-line. LMOS. Notice what it did at the top of this little J-hook pattern with a doji. Opened positive, which told us that this was not acting as resistance, and told us that the 50 was not acting as resistance. I'd stay long as it stays above the T-line with the expectation you're now heading to the 200 because there's a gap right here that is eventually going to fill. Forgot this one. Been holding the calls on this one and staying long. There's again that gap up. Now you're in a 45 degree. In this case, same trajectory as what the previous trend was. This one you just stay long as it doesn't close below the T line. YNDX. This one needs to see some strength. You're hovering here on the T line. Needs to see some strength though to break this downtrending mode. QCOM. Let's make this chart a little steeper. You can be buying this one. Just be aware of the lack of magnitude of move to get up to this level. But right now it's got a left-right combo. You could be buying it. Use the T line as your stop. And Diamond Offshore, this one you can be shorting, especially if they open it weaker. They're probably bringing it back down to the 50. WWE, nothing here. They're probably still taking this down to the 200-day moving average. GRMN, this one you can stay long. You definitely want to see it open positive tomorrow. If it opens weaker, basically tells you that your sideways mode is still in progress. Not a real strong chart, but as you can see on the slower or the longer term chart, you're definitely in a steady uptrend. So if you're long, you just hold this until you definitely stay above the T line, and a long term hold above the 50-day moving average. Let's see. STZ, hold on to this one. You could be buying this one on positive trading tomorrow after the support here on the T line, telling you that the 50 is not acting as resistance anymore. SUNE, stay long on this one as long as it stays above the T line. Nice little J-hook pattern that didn't perform, but still would be an aggressive buyer if it comes back up through this level. Tells you they're breaking out through this downtrending channel. Excuse me. GMCR, GMCR, you can buy this one on positive trading. Bullish engulfing and a close above the T line. And Scotty, you get ready to buy this one. There's a left-right combo right on the 200 and the T line and the 20. A positive open means you have a double bottom. Next target is going to be back up to the 50-day moving average. Atlantic Power, all you can do here is stay long as it stays above the T line. This is one of those cases where if you close it out on this day, you could have been buying it back on this day, seeing that it's going to close above the T line, which tells you this uptrend is still in progress. BCRX, just stay long now, as long as it stays above the T line. ECYT, more than likely, you want to be out of this. This one you should have been out of on the basis that when they took it up that one day and then closed it back below the T line, number one, that did not confirm this signal or this pattern. Back below the T line told you you're still in a downtrend. You shouldn't have been in this long. If you're short, I would now be covering the short position. I wouldn't necessarily be buying this right now, but I'd be watching to cover a short position. Let's see, ISR. There's your kicker. There's your consolidation. This one you can be buying on positive trading tomorrow also, telling you the consolidation's over. The kicker signal's still in effect. XOMA, there's your left-right combo, telling you this consolidation's over. This one you can definitely be buying on positive trading tomorrow with your next target up here at the moving averages. BX, S.BX. Blackstone, nothing here yet. If you're short, you get ready to cover this, especially if I was short, I would definitely cover it if it moved back up above this level. Your stochastics now in the oversold area, seeing a doji at the last support level. If it starts moving positive, it's time to cover that position. I wouldn't be a buyer of this one until it does close above the T line. And SYY. There's your big signal. This one you want to buy because it's going to do a 45-degree, probably the same trajectory as from here. Okay, Gale announcing in the morning that all right, but they're buying it, so if things open now, usually earnings don't really affect the small biotechs greatly because they usually don't have earnings. They're mostly research companies. What really affects them is whether their drugs are being approved by all the approval authorities or not. That's what will move a drug stock much more than their earnings report. Oracle, all you can do here is stay long. Oracle, because of its institutional trading, doesn't have any real aggressive price movement. And UNP, this one, I wouldn't be short because you're in an uptrend, but I wouldn't be long right now with it being back below the T line. So, just in a short statement, I wouldn't be long or short this one. Jitu, how are you doing tonight? That reminds me. We will be doing a couple more sessions at Keuka Lake, our private training sessions. So if that's something of interest to you, kind of put it on your calendar. I think the first week of August, we'll be setting up a couple sessions, usually 2.5 trading or 2.5 days up there. That's where you get to find out all the nuances of the of candlesticks from start to finish. So if you're seeing everything bits and pieces here and you're starting to understand it, you'll understand it a lot more clearly when you can see everything in order and understand the whole concept of candlesticks. Potash, all you can do with this one is stay long as it stays above the T line. And Beeve gapped up. You hang on to this one. If they opened it lower, you might take profits, and then you can always buy it back once you see the buying come back in, which means profit taking, if it opens lower, is going to be somewhere, maybe even back down to the 3T line. And then you can always buy it back when you see the profit taking is over. EPD, just stay long as this stays above the T line. See, we did BWP. This one you want to be probably buying on positive trading tomorrow. The cup and handle with the J-hook type pattern. TSO has to open positive to stay in it. There's your hanging man. There's your bearish confirmation. There's your kind of doji spinning top right on the T line. Makes it very simple. They're going to move it in the direction how they open this. So if they open this lower tomorrow, not only do you want to be out of it, but you might take a look at going short. Price line, as long as this one's staying above the T line right now, you want to stay long. However, you do want to see this break this downtrending channel before getting in with too much aggressiveness. OLED, all you can do on this one is stay short until you see a buy signal. There was your left-right combo, your slow curve dumpling top, and they just haven't been able to get back up above the T line at all. Okay, ARIA. Let's make this more pronounced, see if there's anything there. Nothing that I'd get real excited about. You are in an uptrend. It has to break through this level and the 50. If you're long, you definitely need to see it get through the 50 pretty quick. INFA. This one's having a hard time. This one, if you're long, wouldn't be long until it closed above the T line. If you're, I wouldn't be long or short this one right now. What map service do you use? What map service? What chart service? Well, this one's CQG. I use the one on Thinkorswim. I use TTNet. I use Metastock. Can we get a complete copy of Candlesticks to have as a handy reference? Jerry, there's a couple things you can get. First of all, you got the 12 major signals on the mouse pad or the 2 foot by 3 foot poster. But you also have 2 sets of flashcards you can use. One is the signals and the other one's the patterns. Oh, it didn't scroll fast enough. These sessions are recorded. Yep. Okay, last one. MTOR. This one you stay long. You still in your left-right combo gap up. You want to be buying this one, especially if it opens positive tomorrow. At least you're going to be in a 45 degree. Okay, with that, let's call it a night. We'll see Facebook. I guess I saw that and missed it. Facebook, I wouldn't be really long or short this one until it breaks out through the 50, which is the top of this channel. Right now, as we can see, you're moving sideways on this one. There's really no powerful move to the upside. Okay, everybody have a good evening. We'll see you bright and early tomorrow morning. See you then.